Good morning, everyone. Morning. Let me see what's going on here. Hope you're all doing well. Welcome to our channel yet again, and it is Wednesday, January 24th. Wow, where is the month gone? And today we're going to be talking about the first of the big tech names that's popping out on earnings. It is Netflix. Netflix reported last night, and although some of these headline figures might not look like they've completely smashed expectations out of the water, there are other positives to Netflix that have contributed to this about $50 rally here pre-market and after hours yesterday. The revenue beat with 1.2%, right? The estimate was 8.7 billion from the prior quarter, and they actually came in at 8.8 billion. The earnings slightly missed, nothing crazy, but all in all, Netflix is up drastically, right? Let me see here, how many percent? It's up about 10%, right? We can call it. So, we're seeing that this is the beginning of the tech earnings that are expected to come out, right? Netflix flexing those tech muscles yet again with a solid batch of earnings for the Q4 results. Like I said, we've pretty much hit that 540 area, up about 10%. And we saw that on the previous session, we were up about just over 1% during the regular trading hours after the company revealed that it would ramp up its investments in live programming. So a $5 billion plus deal with combat sports leader TKO Group will grant exclusive rights to Raw, the #1 show in the U.S. network on Comcast, as well as as well as other programming from World Wrestling Entertainment, and bringing the star Dwayne "The Rock" Johnson to the TKO board. So in terms of the numbers, right, Netflix global streaming paid members hit 13.1 million in Q4, marking the strongest ever final quarter for net additions, while the company ended the year with 260.3 million subscribers, marking a record for the streamer. Revenue, meanwhile, returned to double-digit growth, rising 12.5% to $8.83 billion, beating the consensus of $8.71 billion. Elsewhere, operating income dipped to $1.5 billion, but despite a Q4 operating margin of 16.9%, the fiscal 2023 operating margin hit 21%, up from the 18% in 2022. So and ahead of the company's 20% margin target. Free cash flow also remains strong at $1.6 billion, and net cash from operations was $1.7 billion. Both figures were subsequently down, but up heavily from a year ago's totals of 332 million and 444 million respectively. So, some investors here are looking at this and watching that there is moderate pace of growth from its heydays. Netflix has proven a competitive advantage in expanding margins and boosting cash flow needed to maintain its moat amid increasing competition, as we've seen with like Disney Plus and so on. Looking ahead, Netflix is expected to stay resilient in 2024 realistically, with tailwinds including the ARM expansion, cyclical ad spending, and the Summer Olympics, with the U.S. elections and the advent of AI coming to the forefront. So, Netflix is still shining, right, in the increasing crowd of the streaming space, right? We have Hulu, we have, what was the most recent one? Peacock. I don't even know who owns that one, but, their rivals are generally struggling to reach profitability and cutting down their content spending. In contrast, the company behind the streaming revolution is looking forward to a strong content slate made possible by its successful ad-supported service plan and paid sharing, aka password sharing crackdowns. So we believe that there is plenty of room for growth ahead as streaming expands, and our North Star remains the same. To thrill members with our entertainment, Netflix wrote in a shareholder letter adding to expect consolidations among its competitors, especially players with large and declining linear networks. So, with that, right, Netflix still holding pretty strong. We'll see how that either continues or doesn't throughout the regular trading hour session here. But generally speaking, most equities are still continuing this truck higher, especially gapping up from the overnight session. Another big tech name that made news is Apple, right? Apple posts earnings at the beginning of February 1st, so next Thursday actually, and it's up just marginally here pre-market. But a lot of the news surrounding Apple is surrounding this supposed iCar. Various media reports suggest that Apple has pulled back on its car project once again with a new release date in 2028. So the project also said to be a make or break position, while the level of autonomy has downshifted dramatically to level 2 plus from level 4. Apple's Project Titan has now been around since 2014, spurring debate on whether the company could match the margins it generates on its tech products with a vehicle, while Google's or Alphabet's Waymo and Huawei's Baidu and Xiaomi's all have introduced electric cars. Apple's biggest splash in the automobile sector to date was its CarPlay software that has yet shown off a prototype. So what I'm looking at right now, right, Apple is still very close to all-time highs. There was a nice little pickup back into this 181. It's not gapping up as strong as the other ones, but it's one to watch because this can lead how the markets kind of turn and move, especially coming to the earnings season with big tech. In other news here, we don't have too much. Generally, markets are up across the board, pumping into all-time highs. Yesterday, we rallied into the close, and beyond that, right, on the overnight session, doing extremely well. So what we're looking at right now is, let's take a look here. We have Tesla earnings that are coming out after the bell. It's gapping up slightly here as we're holding around that 209 level, which I do like. We have earnings after the bell. Let's see what the expansion is, downside or upside here on Tesla. Generally, they do pretty well on beating earnings. This last earnings period gapped down. It wasn't really as hot, but leading into this with high expectations from tech, we could see something of the sort shape up in Tesla as well. So yesterday, we had seen a lot of talk about China and China finally bottoming as a potential investment criteria, right? Alibaba also surged after Jack Ma Tsai bought buy of $200 million in stock, so we can look at that as well. Generally speaking, right, a lot of people are looking for the bottoming of China, kind of throwing in some money to see if we can actually find something here. It's gapping up pre-market as well, so if this isn't necessarily the bottom or close to the bottom, we're probably going to have nasty headwinds ahead for China yet again. So with that being said, I do want to jump into what we're looking at on these equities, on the equity front, as the S&P 500 continues its pretty strong rally here, breaking into a new all-time high on the overnight session as well as yesterday's session into the close. And we're trading into areas that we've never seen before. That's what all-time high means, right? 49.20s or so are trading right now. And these areas are a little more difficult to trade, I would say. They're not the easiest regions to be a part of, right? Especially trying to fade an all-time high, meaning trying to sell into an all-time high, expecting that to be the high and this thing to turn around. It feels very good if it happens, but it feels terrible if you just continuously short and short and short as this thing continues to rally. So you just got to be very cautious about that. Into all-time highs, generally what happens a lot of positioning looks at all-time highs on overall markets and individual stocks to actually buy into them for that momentum expansion. Right? Momentum starts to increase very drastically once we break a significant level like this, and an all-time high is the most significant level that we could theoretically think of. So big money is probably going to try to pour into this, and I want to see if we can pull back and hold any of these pullbacks. I'd be watching somewhere between that, like around that 49.10 area on the S&P 500 futures to see if we can get that expansionary move back to the upside on a smaller pullback to take maybe some profit on this. Anything back under 48, like 96, 97 area, honestly, we start accepting into a distribution bag below, and it's going to be very difficult to be long under those levels as we can start exploring prices to the downside. So it's very pivotal for these longs to continue this momentum run. We're through a high. If we keep closing above these highs like this, there's just going to be continuous momentum. We're above multiple initial balances on prices from different sessions, so I'm still leaning to look for this upside momentum shift that could bring us maybe towards that 49.60 area as one of the targets. 5,000 on the S&P 500 futures are not necessarily out of the question. I think we're probably going to hit that this first quarter of the year before anything else happens. With that being said, right, good morning to everyone. Thank you all for jumping on and watching me. We're going to be opening up our live trading room in just a bit. But before we talk about that a little, today we're going to be going live on YouTube. I'm going to be streaming the afternoon session starting at about 2 p.m. Eastern time. I'll be streaming breakdowns, trades, analysis, all that stuff. And I'm going to be doing that for the rest of the week. So come on and join me there on YouTube. Again, big stream happening for the remainder of the week. And we're going to be trading multiple different assets, doing some analysis on different assets, how to look at the market, what to look for, talking about depth of market, talking about order flow and all that stuff. So I want you guys to check that out. Join me there. And what else? We're going to open up our live trading room in just a bit. Trading these futures. I've been trading pretty much all the equities minus Dow this year because it looks like there's good opportunity realistically. So let's see how that shapes up. I hope you all have a great rest of the day.